Hello everyone, welcome to another video on this channel. And today I'll be taking you through a strategy that most of you asked a video for, which is the Asian range strategy. So I've taken long without recording this video because I've been so busy, but I hope this will be the start of a good series of videos, So today we are going to just look at basics of the Asian range. I'll be showing you how to use it and add it to your current strategy. As you all know, I have another strategy that I use, but I also add this as a confluence sometimes in order to get quality setups or high probability setups. So straight to the point, if you're new here, just subscribe, like the video, and always leave a comment to the guys who watch. It helps us grow this channel and the community as well. And also there is a community, Telegram community, which is open, so you can just check for the link in the description. We are going to be looking at the Asian range sweep strategy and how we use liquidity to determine where the market is going to go in that day, or in just the London or New York session. So I'll go on to the next slide, which is to define what the Asian range is. And just for someone who's never heard of it, it's just the price movement during the Asian session. Now, if you're not sure, or if you don't know what sessions are in trading, you can go to the first video on this channel, or you can just send me a DM, and you can join the community and ask questions. And if you want to start out to trade, just go to the community, look for the admin, and you can send a message. So the Asian range is price movement during the Asian trading session. As you all know, we have three major trading sessions, even though some people add others like the Frankfurt Open and stuff like that. But I consider three. We have the Asian session, and then we have the London session, and then we have the New York session. So at times people divide this into two. We have the Sydney and Tokyo session, but I put them into one, because the Asians are part of the world. So this is the Asian, this is London, and this is New York, and they follow each other like that. So the typical Asian session is you can adjust with the different time zones that we have. Currently I'm in a GMT +3 environment, so you can just adjust the time. When I talk about the time, you can just adjust according to your time or to your broker. So the Asian session starts from around to me, I consider it starts from around 3 a.m. to the time when the London session opens, which is either 10 a.m. or 11 a.m. in East Africa. That is East African time. So our London session here opens at 10 a.m. East African time. Guys, this time may disturb us a lot, but what you can do is you can just adjust your time and find out what time your Asian session begins and what time your London session begins, where you are or where you stay, because I won't be saying GMT, then EAT or EST or something like that, or UTC. I just want to be in my time because I know there are many people watching from East Africa. So some people mark the Asian session from midnight to around 9 a.m. or 10 a.m. So you can just adjust just go ahead and find out what time your Asian session begins, or London or New York. So most times the reason why I say here that it forms a narrow consolidation, it's because of the pairs, the specific pairs that I'm talking about. Now I'm going to be talking about mostly GBP USD and maybe Euro USD, and pairs that don't move in the Asian session but react in the London and New York, So in the Asian session, you find out that in those pairs, for example, GBP USD, we are going to have a narrow consolidation or low volume. Let me just say low volume in those in that time frame. So what happens is the Asian session will create equal highs and equal lows, something like that sometimes. At times it will range, but not so much. It will trend, but not so much, So when it does this, it means it has created something like a liquidity pool for London traders, So the Asian range acts as a liquidity pool before the London session actually begins. So that's what we want to use to advantage to formulate a strategy. So what happens when it has formed a liquidity pool? We get something called a sweep. We get a liquidity sweep. So what the analogy is that institutions that trade these markets need liquidity. They need liquidity because markets move. And I say markets move either up or down, and they move outside the Asian session. So for us to have moves outside the Asian session, we have to have liquidity. You get? So institutions require large amounts of liquidity to execute their orders effectively. They need money to execute their orders. So rather than chasing price, they often move the market towards those liquidity pools. So let's say this is the Asian. Anyway, I'm going to show you. We have some diagrams in the next slide, but just to show you an example, let's say this is the Asian session. So what this does is liquidity is up here or down here, depending on the position of the market. So we have some orders which are pending here, and we also have orders that are pending here. So the orders that are down here for guys who are waiting to okay, these are stop losses of people who are looking to sell. Up here, there are stop losses of people who entered from these points that are looking to sell this market. And down here you may find stop orders of guys who are waiting to long this market. That's all liquidity. So the intention of that move beyond these highs, for the intention of the market moving beyond these lines that I've drawn, is called a liquidity sweep or a stop hunt. So some of these topics may be hard for you, and if they're hard, just you need to learn the basics. Just send me a DM or leave a comment. Moving on faster. What retail traders often place is, I've talked about, they place buy stops are above the Asian high. They put sell stops below the Asian low. So it's just a lot of liquidity lying around. So what large traders do, like the banks, pension funds, how they call that other thing, that company that manages money for people, they push the market to trigger stop losses and fill large orders, then reverse the price towards the real direction, what we call a liquidity sweep. Oh, I was talking about hedge funds. Yeah, that's what they do. So moving on, we are going to see how to trade this strategy step by step. And we mostly consider market structure. If you don't know how to do market structure, you're going to have difficulty, because I'm going to show you a better way of using this strategy into your advantage. Even though there are other strategies of how to use it, there's one with ICT, SMC and stuff like that, but I'm going to show you my way, and I believe it's easier for everyone, and you can add it to your strategy, the one that you're using currently. So what we basically do is Asian range forms, London open comes, then price sweeps either up or down, market reverses, right? Then the new trend begins. So I'm going to show you the types, and what we do are the different ways that we trade the strategy. They're different. It can't just be one, they're different. That I'm going to show you. But basically the concept is, let the market range, let it manipulate, and let's have an expansion, then a correction, which I'm going to show you. Now this is typically what a ranging market is. And again, guys, if you want to study, just DM me, because you can't understand these things at once. This is what we call a ranging market. So we have orders lying above here and also down here. So our Asian range is going to be like the next slide. What we are looking at is the market. This is the Asian range playing around. You can see that it's just playing around the box. So what happens? We have what we call an expansion to the upside, which is the one going to sweep liquidity. This is the daily agenda of the market. So at times we have it sweep liquidity to the upside. Then afterward we have this movement to the downside. We have this manipulation. Then we have this expansion to the downside. So this is London session, and this is our New York session. So we have this expansion, this manipulation. Let me remove this. We have this range, then we have this manipulation, then we have the expansion to the downside, then we have a correction, which is this last one. a correction of the move, and then we have the market most times closing back to where it began from. At times, it's not one thing that happens every day. Ranging, manipulation, expansion, correction. So it's like a heartbeat, the daily agenda. So these are the types of Asian ranges, or the Asian range types, and you're going to find them in your market. You're going to find them everywhere. You're going to find them everywhere. And there are so many types, but you can build a strategy around this whole concept. You can build a strategy around this whole concept. Just a minute. So before we even look at this, I want you to always remember, market structure is going to help you a lot. If the market is trending downward, it's most times advised that you go with it to the downside. If the market is going upward, it's most times advisable that you go with the market to the upside. Don't try to oppose it. So we looked at the concept. The concept is easy: range, manipulate, expand, correction. And we also looked at what we are going to just break down in this strategy. So we have the Asian range. This is what you're supposed to wait for. Then the London session opens, it sweeps, which we call the manipulation. Then we have the expansion, which is at times to the downside. Then we have it coming back. But there are things that we consider even outside this. We consider mostly market structure. Then what we do after looking at the market structure, you determine the potential outcome of that market. I'm already breaking down the strategy. I know I've moved so fast. We may be a few minutes into this, about 12 minutes, but I just want you to understand the whole concept here. So market structure, look at the trend of that market. After looking at the trend of that market, look out for potential outcomes. You get? And just to tell you what potential is look into your strategy and say, where do you think this market is likely to go to? Where? Where is the Asian range positioned? I just want you to, the Asian range is that type of market that is, we are going to look at the types, but it's not so, it's just that, just take it as that time frame. That time frame. You don't just mark out the highest point and the lowest point of that time frame where we had the Asian session. That is the Asian range. And we're going to look at its types. So after you've determined market structure, look out for the potential outcome. Where is the market likely to go? Where is the Asian range position? And we're going to break it down. Then after that, the most important thing is looking for your areas of value. Areas of value like demand zones close by, supply zones close by, and then wait for manipulation. So let's go to what I mean. So we have two types of Asian range. We have one that consolidates, and then we have one that trends. By consolidating, I mean the market is going to play just around 1 point. It won't be as perfect, guys. It's going to play almost something like a box like this, without not so much volume, just up and down in one place. You get? So what happens after? We have the London session opening, or what people call the Frankfurt. There is a Frankfurt, London. So we have the market playing around, session opens, we have it doing what? Manipulating to the downside. To what? Now this is what we call an area of value down here. This area of value. Now what do I mean by an area of value? It can be, since you're looking for buys, it can be a demand zone, right? It can be a support and resistance. Sorry, it can be a support zone. It can be a psychological level. It can be your trend line. Your area of value. It can be your Fibonacci. So we have this market playing around there. Then we have what we call the manipulation that I'm talking about. It manipulates to take out these orders that are down here. You get? So it manipulates to an area of value. Then what do you wait for? You wait for it to close back. Some people wait for it to close back into the Asian, but that's, at times it may not happen. But what you want to see is the market structure here, for it to give us a confirmation. Now this one, it gave us an inverse head and shoulders, right? This inverse head and shoulders here. So your entry can be here, maybe at a fair value gap or some. Add your strategies. So your target will be at the high of your Asian range. You see how it's easy? Then we have the trending Asian range, whereby the market forms a mini trend. It forms a mini trend. And what happens? When after that we have Frankfurt open here, what does the market do? Instead of manipulating to the upside, it manipulates to the downside. But when it manipulates, it can manipulate and stays inside what? Your Asian range. But wait, now this trending Asian range, we look for an area of value below. It can be, you can find a demand zone here. It can be a demand zone, order block, something like that. So it manipulates to that area of value, or your trend line, to that area of value. Then as we wait for it to close back in, and then what? Wait for maybe for it to come back into a fair value gap or another demand zone, and then you jump in for the buy. Target is the high of your Asian range. You get, you can replay the video as many times. So firstly, let's look at the consolidated Asian range variance. It's the first one that we're going to look at. So we have the market consolidating in the Asian range. We have it playing around the Asian range. And what happens? Asian range closes here. And what does that do? It can play around. It's here. London session opens. Frankfurt, there is a Frankfurt open here. The market manipulates to the downside to your area of value. From talking about this, it can be a demand zone or something. Then after it has manipulated, take out these orders. Then after it reverses and starts going up. Target is here, right? You can see there is overall ranging. What you do first, like I said, market structure, determine if you're in a downward market or in this is an upward market because it's going upward, right? So if you're in an upward market, the market it's moving up. It can form the Asian range somewhere here. So it can manipulate to the downside, but I want you to follow the trend. So market structure is going to do for you justice first. After market structure, look out for the potential outcome. Like I've said, the buys, is this market likely to buy or to sell? Okay. Is it likely to buy or to sell? Those are the questions you ask yourself. So after that question, if your Asian range theory or your manipulation is in line with the trend, go with that. It will save you a lot. It will say, I know there's so many people who trade any direction it breaks out in, the reverse is true. As long as it works for you. But to me, I've seen these markets, you have to trade with the trend most times. But of course, you can build a strategy that also mitigates that. So you can either enter aggressively or conservatively. So this is an example of what we are talking about. Asian range is here. Guys, this is an indicator that finds for me these ranges. It's called the Asian range, Asian session. So you can see these blue lines are here running through, if you can't see well. So we have this Asian range. You can see how it's playing around. So what happens? Manipulation came down. Manipulation happened here. Manipulation happened here. So like I've said, manipulation can happen to a fair value gap or a demand zone or something like that. Okay? It can happen to either of those zones. So you may find this is a demand zone or an order block like that. So we get the market, it was up here, then it manipulated, swept orders here, so you'd get an entry. You can see that you'd get an entry right somewhere here, and your target can even be here. Your target can be here. So at times you use fair value gaps or some stuff like that to determine. Someone may find, guys, I don't know how to use fair value gaps, but I had it's the distance like that. So you do something like that and you find your entry here, So that is just an example of the first one. So the next one we have is this one, also happening in an uptrend, and we are looking for buys. You can see we have this consolidation. This time round, the market didn't manipulate to take out orders this side. I hope you're seeing that. What did it do? It manipulated up. Then, of course, people jumped in thinking it's going up. So what happened? We had this movement come in here to our demand zone. You can see the demand zone is found in the Asian range. This is our Asian range. The demand zone was found in the Asian range, and when the market came back here, we got in opportunities. And you always have to mark out your supply and demand, or support and resistance, and adapt to the trend. And I'll show you a clear example. This was a clear example. Now this one didn't come back to inside here, but I had something like a psychological level here. So you can see that even in this buying trend, the market didn't manipulate here downward, sweep liquidity and go up. It just manipulated upward, then came back, and then found me an entry, and I got in. You get? So you'll find so many types out there, so many types. So many types. Now, okay, this one is an example of the first one. Market manipulated to the downside. Would have got an entry here. Target is here. You get? Now for this other one, you can see that the target, you have to find another tool to find your target. Let's go into another variant. This is another trade. This is the ones where the market is trending. This is also upward. So the market is forming high highs, high lows in the Asian session. What does it do? It manipulates to the downside. Now, it manipulates the downside either to an area of value, maybe support or demand zone. That's why it manipulates to. Now, another thing, it can manipulate to here and you jump in. It's okay. It's not, this strategy is not 100%. Yes, there's nothing that's 100%, okay? As long as you have your strategy entry module or something like that, it's very easy for you. So it's okay to come here and think it has manipulated either to 61.8 fib and you miss it. You get it another day. Or you can have a strategy that helps you conservatively. First get in here. If you have another zone down here, you look into getting another setup here. Then you target up here, So I have an example of that. The market came, it was playing around. It didn't manipulate upward. It just went down to a psychological level 50 Fibonacci, and then formed market structure and went upside. You can see it here. Asian session, manipulation happened here to a 50 or 61.8 fib. Confirmation is this engulfing. Target can be here, or just get an entry. But this was a good one because we had serious movement to the upside. And at times I use other tools too, to determine if the market will continue. But this was a big trade. We had an inverse head and shoulders here for the upside. So it just reached here and found so this market had the ability to manipulate even to this point and then go up, because this was an area of value. So then we have another variant of it. It's the one I'm talking about, right? It manipulates even lower than the Asian session. Is it the one? Okay, this one just stopped at the Asian session. This one would have stopped at the Asian session, but it can manipulate lower into this area because it would be lower, and then you jump in. Or it can give you hope. It can give you hope here, then take you out, then go lower, manipulate, and then this would be the best entry if that had happened. So you have to be aware of all that. Now there are these basic ones that I traded before where the market was ranging. Now you see why I follow the trend. You can see this is a downward trend. Sample would be looking for, maybe if it sweeps lower they would enter. No, it's the best time to do is find. Now here it manipulated to a trend line. Asian session manipulated to a trend line, found my area of value at this trend line, then started selling. Target would have been this one. Put it together, put 1 and 2 together to formulate a strategy. Moving on, I've talked about this one. This would be a clear example of that today. Today it happened on USD card. We had our Asian session here. It ranged because it formed higher low. Okay, higher low. So the market first gave us indication here, which was at the 50%. I would have entered here because it was a buying market, but then it manipulated lower to an area of value and then started rising again. So you shall find those also. So you have to easily change. Let's go to the chart and I show you. This is exactly what I'm talking about. And I use this strategy a lot, guys. I don't trade all these pairs. Sometimes I have guys who ask me to analyze pairs and I add them. But let's look at gold. You see, so gold today, the market was selling. We had our Asian session, which was kind of okay, trending. So what did it do? It didn't manipulate outside or to this side. No, it just came here, manipulated here 50% and then found a sell here. Now this can be a Fibonacci zone or something like that. So if I go lower, you have to follow the trend. You have to follow the trend. Now here, okay, this is a buy trade, the buying trend. So you can see that we had this trending one, but market manipulated outside. You get, then would have found an entry, a target would be here, and would get out of that. So there are other people who have better strategies than this with the Asian range, but you can use it. You can use the one I've told you today to do something good. So we have this one, a trending one. You can see it didn't manipulate, or it just stopped there at, I don't know which area of value, then it went up. So you can always backtest this strategy with the trend. This is a downward trend. Market didn't manipulate really, just went back up 50%, then dropped massively. Look at this one, trending market to the downside. I don't really need to look for buys here. And what do? If the manipulation is to the outside, what I'm going to do, I'm going to just wait for it to give me a pullback to an area of value, maybe a supply zone, which is here, and then I would short the market. Would be, this can be my take profit somewhere of value, this side. So look at this one. It's also, can I say it's mixed up? At times you won't get a setup too. You have to know that. So this one is mixed up, nothing really, not much. The best thing to do is to line it with your other strategy, predict the outcome, and use the Asian range to your advantage. This one, I don't know if there's a manipulation, but didn't really happen. Market just dropped because of the trend, because of that trend. So we have this one, which is, I don't know which trend we are in here, but I see the market manipulated, went up, manipulated again, and sometimes you won't find setups with this too. You have to be aware of that. So here we have the market just start going immediately. Immediately this session is done. Asian session is done. Market just started going back up, I don't know, to an area of value, which is a supply zone, then dropped massively. Then we had what we call manipulation, expansion, then correction. Yeah, that's how we do it around here. That's how we do it. So you add it up. This was an amazing trade I got. You can see that here the market was changing trend, something like that, and it manipulated outside and came to an area of value for me to get a buy trade. You get, at times I add it with trading with the trend, best way to do it, and it's really amazing. So I don't trade on Monday, so some of these setups were Monday call. Now this is a downward trend, but you can see there's no manipulation. Market pulled back in. It must have manipulated, of course. To me, at times it will manipulate, take out those orders. You have to mark out the market structure. So if it first manipulates to that direction and taps into something, it may not do it twice again. That's why it's okay to follow the trend. But you can see how it went back in to another area of value, which is a supply zone, and then dropped massively, then again pulled back into another zone. So this with trend lines, massive, like very, very good, very, very good, so you have to use all the other strategies that we have talked about to find opportunities. You have to find opportunities with, but first things first, trade with the trend. You can see here we had this market this was the area of value, already tapped, came back, gave us a buying opportunity at a Fibonacci ratio and just went up. let me see here. We got, okay, now this is a funny one. This is the one that we talked about last. Market swept here, but since we're in line with the trend, we look for buys. Manipulated to, this was a trend line here. This was yesterday. There's a trend line running from down. Manipulated to that trend line, then went up. So that's basically the strategy. I'll drop some setups for you guys in the community, and yeah, let's cook up something. So thank you for watching this video. Like, subscribe, and all that, and of course leave a comment. Let's talk about last one. Market was in a consolidation, did manipulate to this side. I expected it to manipulate to this side, but it didn't manipulate to the downside, but just continued and went lower and lower and lower. And yeah, that one I wouldn't have traded it either way. But if it had given us a pullback to this area, I would have traded it for London. Now there's another Asian range trading strategy that includes the New York session, and you can find 4 setups, and I think I'll make a video about it next time. But for today, thank you for watching. I hope it was insightful, and see you on the next video.